'Tis I, the rumpled one. Today, I'm going to talk about all you need to know about trading. Many of you have been following me on the various forums for years now, and you know I catch a lot of flack on the forums, and some people have been asking me for years, please do videos. So 2012 we're going to start videos, so this will be the first trading videos. And once again, all you need to know about trading. First thing you need to know, price either goes up or down. There's no such thing as price moving sideways. For price to move, it has to change. If it changed and it either went up or it went down, it's that simple. No one knows what will happen next. If they did, the market would cease to exist, because then no one would ever lose. Keep losses small and let winners run. You've heard that before. You just have to do it. You have to take your stops when they're hit, and when price is going in your favor, you have to sit on your hands and let the price run. Position size equals risk divided by stop loss. A very simple formula. All you have to do is pick any two out of the three and then let the formula solve for the third. You shouldn't go wrong if you do that. The reason you entered a trade has no bearing on the outcome of your trade. Doesn't matter if you use indicators, if you have naked charts, if you roll the dice, if you toss a coin. The moment you put the trade on, it's up to the market. The reason you entered doesn't matter at all. You can control the size of your loss. That's skill. But you can't control the size of your win. That's luck. So in other words, if the market goes in your favor, it might just go a little bit, or it might go to the moon. You can't control that at all. But if price is going against you, you can pull the plug at any time. You need to know when to pick up your chips and cash them in. It's real simple. If you get too greedy, you'll wind up giving it all back. Now, expectancy. That's the probability of a win times the average win size minus the probability of a loss times the average loss size. You cannot control the probabilities of winning or losing. You cannot control your average win size. The only part of the equation that you can control is your average loss size. And I just mentioned that, but I was asked to do a talk about expectancy, and that's when I came up with these things. Price action. If you read on all the different forums, there's always some person out there that, tells you, oh, you need to trade price action. But has anybody ever explained price action? Have they? Oh, you've got to look at the chart and read the price action. Do they tell you how to read it? Usually it's some convoluted definition at best that you wind up scratching your head because you don't have a clue what they're talking about. Let me make it real simple. Price action. Number one, price will either break out of the high, low, or both of the previous bar or candle. It's that simple. Two, price will not break out of the previous bar. Those are the only two choices. You cannot reduce it any further, and anything else complicates the issue. Price action is real simple. Entering a trade. You either decide to, 1, wait and you don't enter the trade, 2, you're going to trade a breakout, or 3, you're going to trade a reversal. Those are your only 3 options. Doesn't matter what method, system, plan, if you look at it and analyze its parts, those are the only three options. This is what's most important, people. Trading is guessing. If it wasn't, you wouldn't need a stop loss. Think about it. Why do we have stop losses? In case we're, what, wrong about the direction of price? So, how can we be wrong? Price moves against us. Well, we thought it was going to go up based on our analysis, our indicators, our method, whatever, but we were wrong. So it must have been a guess, because if it wasn't a guess, then price would have went in our direction. So you have to internalize this. It doesn't matter the reason you enter the trade, because you don't know what's going to happen. You're guessing. Maybe it's a calculated guess and you're making a calculated risk, but it is still a guess. That's all you need to know about trading. Remember, it's not what you trade, it's how you trade it. Also, remember to subscribe to this thread. We'll see you soon.